Well, hello and welcome. We are in conversation with famed veteran investor Jim Rogers, chairman of Rogers Holdings, who will help us take us through the latest move on the Federal Reserve and all that is happening in the global markets. Thank you, Jim, for joining us. It's been a pleasure. And I hope that you can have this conversation with us and solve a lot of our difficulties and doubts when there is plenty of concerns rising in the global markets. With that, I'm going to ask Shraddha to get off the mark.
Hi Jim, firstly a very good morning to you. So the long elusive 25 basis points rate hike that everybody has been waiting for has finally come through. Is the US Central Bank moving in the right direction?
Well, I know that you all have to pay attention to the Federal Reserve and the central banks, but I don't pay too much attention because they really just follow the market. As you know, the Federal Reserve last December said they would raise interest rates 4 times in 2016. They raised interest rates once. So I just don't pay attention to them. The market, they follow the market. And you have to report on something, but you should follow the market, not the central banks.
Okay, as you said, no, please go ahead. As you said, Janet Yellen spoke about 4 interest rate hikes in 2016 and only 1 came through. Now, this time the Fed is talking about 3 hikes in 2017. How much do you think can really come through?
Well, what will happen with the Federal Reserve is the market will tell them what to do. I suspect, as you know, interest rates have already started going up in the market, and I suspect you will see the market going higher and higher because we have inflation coming back. We have staggering amounts of debt coming from America, if nowhere else, but everybody has a lot of more debt coming. So I suspect the market will continue to go higher. Whether the Fed raises interest rates once or 4 times, I don't particularly care. I'm watching the market.
Well, Jim, you know,
and the market and the interest rates in the market, Shraddha, are going high.
Well, Jim, you know what? I was checking the Dow Jones. It's trading near lifetime highs right now. But some are of the opinion out there that the U.S. equities are running slightly ahead of the projected growth. What is your opinion on U.S. equities, especially in the backdrop now that you have Donald Trump as the presidential elect?
Well, Mr. Trump has said he's going to cut taxes. That's great for any economy. He has said he's going to rebuild America's failed infrastructure. We desperately need it. The problem, and the market is paying attention to that. He said he's going to deregulate a lot of things. The market loves it because industry will be better. Says he's going to cut taxes for corporations. That means profits will be higher. But, Ajahn, where's the money coming from? At the moment, everybody's just watching the good news and not thinking about the possible bad news. Plus, Mr. Trump always before insisted that he would have trade wars with China, with India, with other people, and the market is ignoring that right now. Now, maybe he's not going to do it. And if that's the case, the American economy will be better next year and the world economy. But the market is far ahead of itself at the moment.
Jim, you've also recently spoken about having large positions in the US dollar. And, you know, Donald Trump has spoken about imposing import duties from emerging market countries. But he has also spoken about increasing exports from the US, which will require the dollar to remain weakened at least to a certain extent. Based on that, what is your position on the US dollar right now? What is the outlook?
Well, Ajahn, I own a lot of US dollars, and I have for quite a while, as you may know. I own them partly because there's a lot of turmoil coming, and people look for a safe haven in times of turmoil. They think the U.S. dollar is a safe haven. It's not, but people think it is. Plus, Ajahn, American corporations have $3 trillion with a T, U.S. dollars outside of America. Mr. Trump says he's going to figure out a way to get them to bring that money back. If he gets $3 trillion to come back into the U.S., that's going to do a lot for the U.S. dollar, and it's going to help the markets for a while. So the good news, we all know the good news. That's what we're focusing on at the moment. I own a lot of U.S. dollars because of that.
Jim, do you think that we have reversed the course of excessive liquidity supply from the central banks with the U.S., Japan and European central banks looking for a higher interest rate environment around the world?
Well, all the central banks around the world continue to print money, Strata. The Japanese, they said unlimited amounts of money. The Europeans, the English, they've all said we're going to print a lot of money. Even the Americans are printing money. They're raising interest rates now because the market is raising interest rates. But there's no monetary tightening anywhere in the world, not even in India, as you know. And India has had, anyway, one of the less bad central banks in the world.
Okay. Which are the biggest factors that will influence global markets now?
Right now, the main factor is Mr. Trump and his talk about a lot of good news, which we all want to hear. But again, now we're going to have to start focusing on interest rates and what's happening in the real economy. There's a lot of debt. For instance, in China, there's a lot of debt now. There was not debt there before, like even 10 years ago. So we all have to start paying attention to the interest rate burden that everybody's going to suffer. And unless Mr. Trump can do something with that $3 trillion, which would help finance the things he's talking about, we're all going to face some problems. I expect problems next year in the financial markets worldwide. I don't expect good times.
Okay. So where do you see the greatest opportunity right now, apart from the US dollar?
Well, Russia, the Russians a hated stock market, as you know, very depressed. I bought more Russia last week, and as you probably know, Mr. Trump says he likes Mr. Putin. The person who may well be president of France also likes Mr. Putin. More and more politicians in Finland, Norway are saying we like Mr. Putin. So Russia is a market that I still find attractive. It's very depressed still, but a lot of good things are starting to happen.
Jim, OPEC has decided to cut production in crude, and you have earlier also spoken about the potentialities of war should Donald Trump be the president. In that circumstance, would you be bullish on crude going forward?
Yes, crude is making its bottom. We'll look back at a couple of years and we'll see that in 2015, 2016, 2017, oil made its bottom and will be going higher. I don't pay attention to OPEC. I've been watching OPEC for 50 years. So they always say something and reporters have to report it. But pay attention to what's happening in the real world, John. In the real world, production is going down. The frackers cannot make money. Many people have cut production. So production is going down in the real world. And that's why OPEC might be able to get away with this. It's not OPEC, though. It's the market.
Jim, you also just spoke about Russia right now. And, I'm reading a report where Russia has taken over China as a fundamentally stronger so to speak, nation when it comes to equities. So if I were to ask you to compare Russia standing versus China, how would you go about it? I'm assuming Russia would be your preference right now.
Well, as far as buying shares, yes, I would prefer to buy shares in Russia right now rather than China for the reasons I said. Russia's been the most hated stock market in the world. Whenever you can find a market that's hated, you're probably going to find good opportunities, especially in a place like Russia where oil prices are getting better and the political pressure is changing. The new Secretary of State in the U.S. is a great friend of Russia. He loves Russia. Trump loves Russia. So the pressure is coming off of Russia.
Jim, you've been pretty bullish on India in the past. So how does India stack up given the twin impact of currency demonetization and on the other hand, the brunt it is bearing of the stronger US dollar because of the emerging market factor?
Well, the US dollar is going to go higher, which means nearly all currencies are going to go down. When something goes up, something else has to go down. So the rupee will go down. Everything will go down in the future. But Mr. Modi, I loved Mr. Modi when he was about to win the election. I invested in India, but since then, he's done one good thing. He changed the GST, which is a miracle and great. But then he turns around and does other things that are not so good. You see what he's doing with the currency right now. He's essentially causing chaos for a lot of people.
All right, those are very interesting thoughts coming from Jim Rogers. Jim, thank you very much for joining us. Really appreciate your time. And as for you guys, stay tuned to BloombergQuint as we bring to you more global voices on the Fed.